you could completely annihilate and cripple the entire retail sector across the country for, let me be generous, $1 billion. $1 billion would clean up every single ounce of gold, every single ounce of silver. There'd be nothing available, and premiums would be 100% over spot, and spot would be meaningless. And that's where we're headed.
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates. In the world of precious metals and commodities, few things can stir the waters quite as significantly as pivotal decisions and announcements from global monetary policymakers. Currently, the silver market stands on the precipice of potential change, with investors and traders keenly focusing on one key event, the upcoming speech by Federal Reserve Chair Jerome Powell. In the vast arena of global finance, there are few voices as consequential as that of the Federal Reserve Chair. Jerome Powell, as the helm of the U.S. central banking system, occupies a position of unparalleled influence. Each statement, every nuance and subtle hint in his speeches can send ripples across markets, and the world of precious metals is no exception. Understanding the profound impact of Powell's words requires a brief excursion into the intricate relationship between central bank decisions and commodity markets. The Federal Reserve, through its monetary policies, has a direct hand in shaping the U.S. economy's trajectory. This, in turn, affects the value of the U.S. dollar, interest rates, and ultimately, the attractiveness of assets like silver. As investors and traders grapple with a myriad of factors influencing their decisions, guidance from the Federal Reserve offers a semblance of clarity amidst the chaos. In this light, Powell's speeches aren't just informational events, they're defining moments that can shape market sentiment for weeks and months to come. His forthcoming address has garnered heightened attention, and for a good reason. With global economies still navigating the ramifications of the pandemic, unprecedented fiscal policies, and simmering geopolitical tensions, the direction the Federal Reserve takes could be a compass in uncertain times. For silver enthusiasts, the connection is clear. The metal's price doesn't just respond to supply and demand dynamics, but also the macroeconomic signals emanating from power centers like the Federal Reserve. Hence, as the market stands on the cusp of potential change, the question on every investor's mind is, what will Powell say next? It's this backdrop of anticipation and the weight of Powell's role that sets the stage for our next focus, the ever-crucial topic of interest rates. How the Federal Reserve views and manipulates these rates has historically been a significant driver for assets like silver, and with the current climate of speculation, the connection between Powell's guidance on interest rates and silver's future trajectory has never been more pronounced. In the world of finance, the symbiotic dance between silver and interest rates is nothing short of captivating. At the heart of this dance lies a simple truth. The allure of precious metals like silver is inextricably tied to the broader economic rhythms set by institutions like the Federal Reserve. Imagine for a moment the US dollar soaring or tipping based on the tune played by interest rates. When the rates rise, often driven by decisions from the Federal Reserve, the dollar usually finds its wings and soars, casting a long shadow on commodities like silver. For foreign investors, silver becomes pricier as their currencies can purchase fewer dollars. This in turn can diminish silver's demand on the global stage. But it's not just about the direct cost. In a world of rising interest rates, the once silent notes of bonds and savings start singing louder, offering attractive yields. Silver, though resplendent, doesn't sing this melody of regular returns. It remains silent, not offering dividends or interest. So the temptation grows for investors to be drawn to the louder calls of interest-bearing assets, possibly sidelining silver for the moment. Yet there's a twist in our tale. Jerome Powell's words can not only shape the dance but introduce new moves. If his speech suggests that economic waters might be turbulent ahead, the allure of silver as a safe haven might surge. After all, in times of uncertainty, investors often seek solace in the stable embrace of precious metals, looking for safety over returns. As Powell prepares to address the world, the entire financial market waits with bated breath. Will he suggest a continuation of the current rates, hinting at a stable or cautious economic outlook, or will he lean towards tightening, signaling confidence in economic growth? Whichever direction the pendulum swings, silver is poised to respond, moving gracefully to the rhythm of monetary policy. While this dance is entrancing, it's crucial to remember that it's part of a larger ballet. The stage is vast, with global tensions, economic indicators, and geopolitical events playing their roles. And as we pivot from this delicate tango, we set our sights on the broader dance floor, ready to explore the myriad factors influencing silver's future. In our captivating journey through the world of silver, we've observed its intricate steps with interest rates. But as with any rich tapestry, there are multiple threads that weave together to create the bigger picture. Beyond the immediate realm of interest rates lies the vast expanse of global economic indicators that can, and often do, influence silver's trajectory. Consider, for instance, the whispers of geopolitical tensions emanating from the Middle East. Such global events, seemingly distant, can resonate powerfully within the confines of the silver market. Investors, ever watchful, recalibrate their portfolios based on the global economic heartbeat. As regions grapple with uncertainty, the demand for safe haven assets, like silver, often witnesses an uptick. In tandem, the US dollar indexed DXY provides insights, acting as a barometer for the health of the greenback against a basket of other major currencies. Its fluctuations can offer cues about global sentiment towards the US economy and, by extension, commodities priced in dollars. But perhaps one of the more immediate indicators lies in the data churned out by institutions at home. The recent report for the U.S. Department of Labor, indicating a decline in weekly jobless claims, paints a picture of a resilient domestic economy. Such data points, often overlooked, can provide context and direction to silver's movements. Before we delve further into the myriad influences on silver's future, a brief interlude for our avid followers and newcomers alike. If you're keen on keeping your finger on the pulse of the ever-evolving silver narrative, do consider subscribing to our YouTube channel, Silver News Daily. Our commitment is to keep you informed, providing clarity amidst the market's dynamic dance. As we continue our exploration, it's evident that silver doesn't dance to a single tune. Multiple orchestras play simultaneously, each contributing to the metal's movements. And as we transition from the broader economic indicators, it's time to turn our attention to another potent influencer, the behavior and sentiments of market participants, a dance in its own right that we'll navigate next. The symphony of market sentiments, a dance of beliefs and actions. In the grand theater of financial markets, perhaps no players are more influential than the participants themselves. It's their beliefs, sentiments, and subsequent actions that often shape the course of assets, including silver. Beyond cold, hard data and economic indicators, it's this human element that introduces unpredictability and dynamism. When market participants interpret data or react to global events, they don't do so in isolation. It's a collective response, a shared sentiment that ripples through trading floors, digital platforms, and investment forums. This sentiment, often driven by a mix of rational analysis and emotional impulses, can create self-fulfilling prophecies. Imagine a scenario where a majority believe silver prices are poised to rise due to external cues. This collective belief can lead to increased buying, which in turn drives up the price, validating the initial sentiment. Such cyclical feedback loops, fueled by market participants' behavior, can amplify trends, both upward and downward. The anticipation surrounding speeches like Jerome Powell's is a testament to this phenomenon. Investors, traders, and analysts hang on to every word, trying to glean insights and adjusting their strategies accordingly. Their collective reactions, be it exuberance or caution, shape the immediate trajectory of assets. It's also crucial to acknowledge the role of modern tools and platforms in this dance. In today's digital age, news travels faster and sentiments can change in real time. Platforms that allow instant trading decisions, coupled with a vast network of social media discussions, mean that market participants are more connected and reactive than ever before. As we journey through the various facets influencing silver's path, it's evident that each thread, each player, has its role. But as we conclude our exploration of market sentiments, it's time to cast our gaze upon the final act. An act where all these elements converge, painting a holistic picture of silver's potential future. As we draw the curtains on our exploration of silver's multifaceted dance, we arrive at a crossroads where all threads intertwine. Silver's future isn't dictated by a single factor, but rather the harmonious and at times tumultuous convergence of economic indicators, geopolitical events, market sentiments, and the actions of institutions like the Federal Reserve. While the indicators suggest various potential paths for silver, the true trajectory remains shrouded in the mystery of future events and decisions. What is evident, however, is that silver remains a vital player in the global financial stage, responsive to the ever-shifting dynamics of the world economy. As we look ahead, it's crucial for enthusiasts and investors to keep abreast of these evolving narratives. The dance of silver is intricate, and understanding its movements requires a keen eye and a commitment to continuous learning. And speaking of commitment, if you found value in our exploration today and seek to journey further into the world of silver, don't forget to subscribe to Silver News Daily on YouTube. Our dedication is to guide you through the twists and turns of this fascinating realm. However, as we conclude, a word of caution is in order. While we strive to provide comprehensive insights, it's essential to remember that the financial markets are unpredictable by nature. Our discussions are meant for informational purposes and should not be construed as investment advice. Always conduct your research and consult with financial professionals before making investment decisions. Here's to the future of silver, and may your journey through its dance be both enlightening and rewarding.